Good morning and thanks so much for tuning in. This is Buy Now, Sell Now on ET Now and I'm Alex Matthew. Joining me to take you through the next 1 hour is Cheryl D'Souza. From the both of us and everyone that puts this show together, welcome to you. Let's take a check on how the markets are doing. And it's been a rough few days for the equity markets. Thankfully, we're seeing a bit of a breather for Dalal Street as of now, and that's because the handover from the US market was actually also quite positive, largely on account of the perceived dovishness of the US Federal Reserve. The Fed, remember, had that meeting that concluded yesterday, and it said at the end of that meeting that it will keep interest rates at near zero through 2023, and that's longer than a lot of people in the markets had initially forecasted. And you had a clear statement from Fed Chair Jerome Powell where he said that he wasn't too worried about any near-term rises in inflation. He thinks that's going to balance out eventually. But interestingly, 7 out of 18 officials of the Federal Reserve see a hike in 2023, and that's 2 more than there were in December when the policy took place or the meeting took place last. So you had yields as a result of those comments on the shorter end of the spectrum in US Treasuries actually fall because the markets are expecting that there's not going to be a significant rise or any rise in interest rates in the near term at least. But the equity markets took heart from that dovishness, and like I said, they closed well. Let's look at the Indian markets now, and it's reasonably good for the benchmarks. We're trading with gains of about 0.5%, and throughout the session today, the benchmarks have traded in the green. You have broader markets that have underperformed. Yesterday too they underperformed, but they're still in the green as we speak. For the broad market, the market breadth is currently even Steven, so we'll have to see if that strength continues to play out over the course of the remainder of the session. All the sectors apart from IT and pharma are trading in the green. The metal index is back to shining, gaining about 1.5% or thereabouts, probably given up a bit of its gains as of now, but it's looking good at this point. Let's take an interesting view now. We're in fact going to the editor's take where Nikunj Dalmia is here to tell you a very interesting fact on the Microsoft Hub. He's analyzing how selling by domestic institutions is resulting in reduced net investment in the markets as of now. Listen in.
Well, the trade orientation for the better part of 2020 was weak dollar index and rise and outperformance in emerging markets. Is that getting challenged, or is that really, or is there a degree of mean reversion? I would say mean reversion. Well, the data seems to be clearly indicating that in last 1 month, the developed markets have done substantially better than what emerging markets have done. There you can see all emerging markets, including India, have seen a massive underperformance. Is this transitory, or is this a trend for 2021? I would still say transitory. Too early to say that emerging markets will underperform developed markets. But since we track one number very, very closely, so here's a look at how flows essentially have moved. And before we think that foreign institutional investors are selling this market down, look at it. The flows, and I'm looking at the net flows here. It's important to look at the net flows rather than looking at only one number, which is FI activity. Both on the net flow side, between February and March, now remember February was like this gangbuster month because of budget, the flows have not really changed dramatically. The net flows for the month of March, today also, they stand at 8,034 crore. That's very important. There's no large change. But more importantly is the intensity of DII selling. For me, this is the most crucial number. It captures that the DI selling now seems to be reducing. So while FI buying is important, but if DI selling reduces, that also is very, very crucial. And just to substantiate the picture so that all of us can remember it, domestic institutional investors, they continue to sell for the 6th month in a row. Foreign institutional investors, they continue to buy for the 6th month in the row. But the net selling, which is FI buying, minus DI selling seems to be reducing. So for me, that is the most important heartening trend, that our dependence on FII is reducing, and domestic institutional investors, if the redemptions reduce, we may actually be reaching at a very interesting point.
All right, let's move on from there. Let's talk about the stock cloud of the day, the BNSN stock cloud of the day, and take note of which are the stocks that are buzzing in today's trading session on back of news flow. First up, I'll talk about BHEL. The company has emerged as the lowest bidder for a fleet mode tender floated by NPCIL, NPCIL, and that order is worth about 10,800 crore rupees. Saturn Credit is another company that is in focus. The promoters have reduced their pledge percentage from 8.9% as on July 2020 to 3.09% as on March 2021. HCL has bagged an order worth 221 crore rupees, and that's the reason why it is a buzz in trade. SBI Cards, Motilal says that the business growth is recovering well, return ratios is robust. They've upgraded this particular counter to a buy. Morgan Stanley has come up with a note on ITC where they've initiated an overweight stance with a target of 251 rupees per share. On the other hand, Grasim has been upgraded to overweight by JP Morgan, and the target is 1,750 rupees per share. Lupin and Cipla both are in focus today, as Sandoz will now commercialize brand and authorized generics of Proventil HFA. The entry of Sandoz could intensify competition in the market, and that is the reason why Lupin as well as Cipla are in focus. On the other hand, you have Sun TV that is in focus. It is out of FNO ban. And lastly, you have Somani Ceramics, which has approved expansion of production line of double fast firing to produce large format wall tile. So that is the reason why the company stock is a buzz in today's trading session, Alex.
Well, absolutely, Cheryl. Quite the interesting names that you've picked up for us. Let's go across to our guests now. We've got Kunal Bothra and Ashish Kapoor who are joining us today, and I want to go across first to Kunal. Kunal, good morning to you, and we're seeing just a bit of strength, and I think the handover from the markets overseas have been good and heartening. What are the cues that you're picking up in a very short wrap, if you can give us that, and then what are the ideas that you would like to share with our viewers today?
So good morning, Alex. Good morning, everyone. I think it's a very choppy market, frankly. After yesterday's sell-off, the gap up, on the index led to covering of shorts, and then intraday you're seeing some, selling off on the indices yet again. There is a lot of pressure on the market internal. So I think, one of the last 2 days of observation specifically is that there is a lot of profit booking and stock-specific selling, and which is why I believe that the markets could remain under a bit of a pressure, at least for the near term. So I think in these times it's prudent enough to have, mixed kind of a trades. So I will go with one buy and one sell. The first sell which I'm recommending is more from a high risk, a basket. It's a sell on DLF. Now it's a sell on the basis of it's a conditional sell. I'm expecting that the stock could break below its critical swing support of 290. 290 is a major support for DLF. It's also, I think, if I'm not wrong, the 50-day moving average support for the stock price. So I'm sensing that if the stock breaks this level of support once again, there could be one more round of a sharp selling pressure which could come back into the stock. So a sell on DLF on a conditional basis below 290, stop loss to be kept at 303, and targets to be kept at approximately 270. The second one which I'm suggesting is a buy on ITC. Now, I think yesterday on the chart busters as well, I had mentioned how the charts for ITC are poised. The stock is forming multiple bottoms at those 200, 205 kind of a trading range. And it's seeing a bounce back yet again on the short-term charts. There was some covering of the call writing as well, which was seen on yesterday's stock price movement. So I'm expecting that probably if that's the flavor, then for the next couple of weeks, and especially in the market which gets more volatile, there is always a tilt and a bend towards defensive stocks. So I believe ITC could stand to outperform from current levels. Targets of 240, more of a positional stock, and stoppers to be kept at 202.
All right, thanks so much for that, Kunal, and make use of the choppiness is what Kunal is saying. I'm going to go across to Ashish now. Ashish, good morning to you. What are the ideas that you would recommend for those that are likely to go more for a long-term investment, a fundamental view, so to speak?
Well, yes, I think as far as the broader indices are concerned, I think the markets have actually done very well over the last 1 year. So no complaints. We have doubled, and nearly all the frontline stocks have given fantastic returns. So I think what appears now is some sort of consolidation. So we do not expect too much of movement on the indices, at least in the near term, and likely to remain range bound. But a good thing is that the mid cap and the small cap space is buzzing, and there are a lot of stock ideas which are coming up. And I think that it's time to be very stock specific in one's approach. Now, like I said, I think there are a lot of stock ideas. So if you're looking for safety and a value pick, then I think the stock which comes to my mind is BSE. Now, the good thing about this stock is that it is actually the Bombay Stock Exchange, which is the country's second largest exchange. So it's a very secular, very strong business, and growing also, with more participants coming in, investor community growing. And there's also the very interesting mutual fund platform in which they have got a lot of good traction, and in fact they are leading in that. They are doing better than NSE as far as the mutual fund platform goes. So overall also their returns, their results have been very encouraging, both on the volume as well as the margin front. But what is very interesting about this stock is that the main business is available at a negative valuation. If you look at the investments of BSE, which is mainly CDSL stake as well as their cash in the balance sheet as well as other current investments, the net value is 620 rupees per share, and currently BSE is quoting at around 580. So the main business is actually available, not just free, it's available at a negative value. So in fact, theoretically, if you're buying BSE stock, you are getting paid to own a part of the exchange. So it's that cheap. And if you really put a very conservative value also on the exchange, that would come to around 330 rupees per share, and that gives us a target of 950. 950 is a very conservative target. There can be many upside surprises to this. Like I said, the volumes are growing.
Ashish,
sorry.
Ashish, sorry to cut you. Ashish, sorry to cut you. We're running out of time, unfortunately.
Okay.
Let's keep it a little shorter. So BSE is definitely a strong buy from what you're saying, and the valuation picture definitely does look attractive. Let's talk about the next option that we have.
Yeah, okay, just to wrap up BSE, the trigger could be whenever NSE comes for a listing, that could re-rate this stock in a big way. Now, the second idea, which is a little riskier idea, is idea Vodafone, which is risky because still the company is in doldrums looking for some fund infusion. But what gives me confidence is that the telecom industry itself is getting traction, margins are improving, the health of the whole industry is improving, and since idea Vodafone has managed to survive this big storm and has two very strong promoters in the form of Vodafone and Birla Group, so chances of the survival are increasing with every passing day. At 10 rupees, it represents a very good risk-reward paradigm for somebody who is ready to take some risk but wants a very high return in return of that. So I think the riskier idea could be idea Vodafone. Their results have also been encouraging. Margins are improving. ARPU is improving. Volumes have also gone up slightly, and the churn ratio is importantly reducing. So I think this could be the idea for investors who want to take some risk but want a higher return.
All right, so those are the recommendations coming in from Ashish. All right, Kunal and Ashish, hang in there. We'll take a short break on this edition of Buy Now, Sell Now. But once we come back, we'll come back with your stock queries. So viewers, don't go anywhere.
Welcome back. You're tuned in to Buy Now, Sell Now on ET Now, and it's time for us to take the queries that have been sent to us by some of you. And let's start with the big one today. We've got Reliance Industries that we're talking about. Ajay has written in saying that he holds 75 shares of Reliance Industries at an average price of 2,120. He has quite the long time horizon of 5 years. What he's wondering is whether he should switch out or hold the stock? I do understand, Kunal, here that it's a relatively longer term query, but I think a lot of people want to know, should they accumulate Reliance Industries, and therefore what do you have in mind in terms of how the chart is looking? He's bought, if not at the peak, well, about 200 rupees off the peak or thereabouts. What do you have to say with regard to the near term outlook?
So I think it's natural that, frankly, Alex, that traders, they tend to buy the stocks at the higher end of the price trajectory. It's not as if that this is for the first time we've seen this phenomena. It happens quite regularly because of the factor that you tend to miss out on the major chunk of the first rally, which is why you tend to take opportunity of the second wave of the rally if the stock goes into a corrective phase. So, but I believe that if your view is for 5 years, if your time frame is for 5 years, then I believe you should definitely hold on to the stock, from those kind of time frame. Reliance Industries has shown the kind of breakout. So from there on, typically we see at least a 5 to 7 year kind of an upside. So I think even if you look at the near-term prospects for or the near-term charts for Reliance Industries, it's remaining more or less in the consolidation. It's underperformed Nifty for the last, I think, 5 months from the September highs. I think, if I'm not wrong, where the stock had made 2,350 plus levels. From there on, it's underperforming Nifty to a larger extent. So I think it's just about trying to catch up with the the speed in which it had run up from those 850 odd levels from 2020 bottom. So I think the stock is consolidating in the near term. There could be chances that it may go through those periodic corrections as well. But for a 5-year period, I think it's a classic buy on dips. I think if the stock corrects by say another 100, 150 odd rupees from current levels, I think that should be taken as a good opportunity to buy. 1850 apparently on the longer term charts for Reliance Industries has acted as a very good support level.
Okay. All right. So buy on dips is the advice, and hold on to your investment, Ajay, is what Kunal has to say. But on the fundamentals, let me go across to Ashish as well. Ashish, this is very clearly by a lot of people it's said that this is a portfolio stock to hold. Is that something that you believe as well?
Yeah, certainly. I think the company has done very well to go and establish itself into new businesses. And as of date, they have 3 very important verticals in which they have a very robust presence. One, of course, is the traditional oil and petrochemical business, in which they have a very good integration. The second is the telecom, which is the geo platforms, and the way they have got big investors in that, and the way they have rolled out their whole network is also amazing. And third is the organized retail, which is still growing, but they're adding more value to it in many ways. So the combination of the 3 is quite a good proposition. The stock has underperformed the recent past because before that, last year, from May, June to August, it did really outperform. So in some ways, the valuation went a little high very, very fast. So I think it's undergoing a period of consolidation. But since the investor has a long-term period in mind, I don't see any reason to worry. I think this would remain a very large frontline stock and would continue to do well going forward.
All right, that's the view coming in from Ashish on RIL. Let's move on and let's get on board our next viewer query. And this is from Kavi Mirpuri. He's saying that he's bought 300 shares of Bank of Baroda at 88 rupees per share. He wants to know whether he can hold the stock for another year. Kunal, I'll come first to you. Bank of Baroda, that particular counter, along with the other PSU banks, also saw a stellar rally. If you see the buy price of for Bank of Baroda is 88 rupees per share on a higher end. Last 1 month hasn't been good for Bank of Baroda, but what are the charts indicating for the longer term, or at least for the next 1 year?
See, I think for the next couple of months at least, I believe that these PSU stocks, specifically PSU banks, they could go through a bit of a correction. So I think if it's restricted towards move from a trading view, then I believe that there could be chance that these stocks may disappoint somewhat, at least in the near term, maybe go through some sort of a mean reversion process. But then I think the prospects for PSU banking stocks look very attractive to me on the longer term charts. But I think specifically if it's restricted towards PSU banking space, then I believe you should give more importance towards SBI, because in terms of price performance, you always give more premium towards the leader stocks who which tend to lead a breakout. So for the PSU banking stocks, the first stock to actually break past about those 8-year, 10-year highs was actually SBI. So which means that the leadership, quality for the stock could be one of the key reasons why I believe that SBI could probably be the flag bearer for how the overall PSU banking sector can perform in the medium to long term. So I think if I would I mean if I can give a suggestion to the viewer, I would advise that you could switch from Bank of Baroda to a more durable stock, SBI, because I think the prospects from a longer term view stand to be far more better and higher for SBI, and have a slightly longest term time horizon. I think 6 months to 1 year would probably be a slightly shortest kind of a time horizon for a stock like SBI to try and unleash its full potential. So hold on to rather convert your holdings from Bank of Baroda to SBI, and then hold on to it from at least the next 2 to 3 years perspective.
All right, that's the view coming in from Kunal, saying that if you can, then Kavi, look to switch from Bank of Baroda to SBI, because the long-term view for SBI is looking much better. And also, if you can extend your time horizon to 2 to 3 years, it will be much better. You'll be able to see better gains coming in that particular PSU counter. Ashish, what's your view on Bank of Baroda? Fundamentally looks good. Definitely SBI is the flag bearer, like the way how Kunal said. But what's your view on Bank of Baroda?
Well, my view is that, occasionally, once in a few years, you get a rally in PSU banks, and anecdotally and historically, it has always been best to use these rallies to sell. I don't see anything really changing. I don't think these banks are now really in a position to compete in the fast changing economic scenario. And I don't see any reason why any investor should continue holding on to these banks. So yes, there is a rally in these PSU banks now on the back of hope of privatization, as well as possible economic turnaround. This should be an ideal opportunity to exit. I would recommend the investor to use any further rise to try and pare down his exposure to Bank of Baroda. Possibly he will get it very close to his buying price, but don't mind the little bit of loss. It's better to get out of these kind of investments in this rally. And like Kunal said, I think there are many better ideas in the banking space. One, of course, is SBI, because SBI gets much better traction, much better the growth opportunities, and also has embedded value in the various subsidiaries which it owns. Along with that, I would think that the private sector itself is giving so many opportunities. You have so many banks, NBFCs doing so well. So no point in continue to hold on to something which historically, and even I think to the best of at least my knowledge, even going forward, will be a value destroyer. So the earlier you get out of this and move your money somewhere else, the better off will be your returns in the long run. So clearly a sell on rise according to me.
All right, I'm coming back to you, Ashish, on this one, because this is a recent listing. This is in fact RailTel, which listed last month. We've got Kavi Mirpuri, who has bought 300 shares of RailTel at 157, and has given up some of those levels that it saw early on over the past week or so. But Kavi is looking to hold for at least a year or so. Would you say that makes sense?
Yeah, I think this makes sense, because this is quite a unique company. It has near monopoly over the telecom infrastructure of the railways, and in many ways is the digital partner of Indian Railways. So I think the way railways are now looking at telecom network to improve their efficiency, their services, this stock should do well. It is covering a large optical fiber network, around 59,000 kilometers along the rail routes, and also has 5,900 odd railway stations which it covers. So the entire thing is looking very promising. I think digital scope is huge, even when it comes to Indian Railways, and this being the sole partner, I think the situation is very encouraging, because they are doing something which has little competition and huge growth. So certainly I'm pretty bullish on it. I think the investor can certainly hold on to this, and I think in 1 year's time frame should make good money from here.
All right, that's the view coming in from Ashish on RailTel. Let's get on board our next viewer query, and this is from Manmeet Singh from Jalandhar. He's written to us saying that he's bought 2,000 shares of ONGC at 117 rupees per share. He wants to know what's the medium-term outlook for this particular company. Kunal, I'll come first to you on ONGC. The counter has seen good movement in the last at least 52 weeks, if you look at the way how the performance has been, but on a monthly basis been pretty stable. How is the medium-term outlook looking for ONGC, given also that it is dependent slightly on the crude price as well?
So again, I think very, very similar to the view on Bank of Baroda, that the stock has seen a good recovery, but it still remains a bit of a drag. We've seen the recovery for ONGC from 60 rupees to 110, 120 levels, which I think it tested this week or the week prior to that. But I believe that it's still a stock which tends to consolidate for a prolonged period of time. So when you see such a rally for a stock like ONGC, which is typically a very low beta stock, it tends to be it could probably tend to give the next couple of weeks or months as a sideways trading range. So I think in that aspect, the very short-term outlook for ONGC could be that the stock can consolidate, maybe drift towards the 100 mark first before it tries to get back into the demand. And also I think one of the other aspects with the PSU name specifically, not just ONGC but for the entire basket, is that they are very susceptible towards any kind of a news flow. So in the last couple of months, the reason for the rally into many of these PSU stocks was the huge extent of news flow which was in favor for these names, which is why you saw the spurt in prices. So if the news flow tends to die down, then the possibility that the stock can consolidate, go through a downward drift, remain in a bit of a lackluster trading range is far more higher. So I think the short-term outlook would probably depend more on the extent of news flow. In the event that there is no huge amount of news flow which swings the stock prices, I believe the chances of ONGC remaining in a range is far more higher. Possibility that the stock can even correct and consolidate near the 100-105 levels as well is pretty much high.
All right, that's the view coming in on ONGC from Kunal. Ashish, what's your view on ONGC? Are you echoing the similar view of that of Kunal?
Yeah, certainly. I think most of these PSU stocks, when they rally, it's actually a great opportunity to get out, and I think ONGC is not an exception. The stock is rallying and perhaps will continue to do well in the very near future because crude prices are doing fairly well. So I think there could be in the very near term more upside on this. But clearly, this could be the time to come out of it. The biggest risk of holding on to stocks like ONGC is that the main promoter, which is the government, doesn't really manage these companies the way they should be managed. It's more of an administration kind of a thing. So you could have any decision coming in any time which could harm the shareholder value. So before that happens, it's good to come out of this and put your money somewhere else. So yes, in the very near term, chances are that it will go higher because of the crude prices being so robust. But all rises should be exit opportunities.
All right. Let's get in another query. Then we've got Karthikeyan, who's written in about a very recent listing, and that is MTAR Technologies. He did not get the IPO subscription, but he bought on listing day. He bought as many as 200 shares, Kunal, at 1,050 rupees per share. Now, I'm pretty sure that there's not enough data to give a very detailed technical view, but I have a question for you nonetheless. Would you say that it makes sense, if you don't get subscription in these counters, to wait for a little bit for the froth to settle before you decide to take a trading bet?
Well, absolutely. So first on the part that since there is hardly any data point for stock prices, it's very difficult to comment on the stock, even the short term, forget about medium term or long term perspective. But then I think the second part of the question is very, very valid, that I think it makes a lot of sense not to rush in, because in the last 1 week, or rather in the last couple of months, there has been a lot of inflow of fresh retail investors who are now trying to jump onto any kind of an IPO which comes across. So you have to try and understand that IPO markets also does pretty well as as the sentiment of the overall market remains buoyant. But if the market sentiment gets into a bit of a, I would say, negative or a downward drift mode, there is a possibility that many of these IPOs as well, they could give you those short-term rises. But then if you tend to buy them at the higher end of the price curve, you're probably being left to hold the stock from a longer term view, trying for the stock to come back to your cost price at least. So don't make that mistake. Is what I would advise. I would advise to wait patiently for these names. And I think for example, names like Railtel, I think post the listing, the stock gave a 3-day, 4-day jump. Moved up significantly hard to I think 170, 175 levels, and now the stock has come back to 130 levels. So I think if you wait patiently enough, I think there could be a good opportunity that you can buy the same kind of names from the recent IPO listing names at a much lower price than what is available in the market.
Okay, Ashish, coming to you for a quick view on MTAR. A lot's been said in the recent past, doubled on listing day, but since given up some of those gains, what would you give as advice to this viewer though?
Well, I would suggest that he holds on. My simple reason for being bullish, it is a very unique company. It is doing high precision components and extremely high precision components which are used in the defense and the nuclear space. Not too much of competition, and has a huge order book from both ISRO and DRDO, and both these organizations are very good institutions to work with, especially given the current government's focus on increasing nuclear reactors as well as defense expenditure. The order book is very robust. The company has a very unique positioning. Yes, he's bought it high, so could try and average if it comes down or corrects. But certainly hold on. In the long run, you will make money in this.
All right. That's the view coming in from Ashish on the stock as well. All right. On that note, thank you, Kunal, as well as Ashish, for joining us on Buy Now, Sell Now, giving your views, giving your tips, as also resolving viewer queries. And on that note, we'll slip into a break on this edition of Buy Now, Sell Now. But stay tuned to more on the other side. Don't go anywhere.